Hey, it's Dr. Bob Flower. I know you don't recognize me because I've got these protective glasses on. I'm trying to stay incognito. But anyway, this is Monday, May 18th, masterpattern report. And we had a nice move in silver last week, the 14th into the 15th, around our correction date. And these moves, these larger moves, over 100 points in the in the S&Ps, and then the market are getting to be pretty typical once again. So, but yes, we had a real nice move, and oil is playing some games with us here. I'm totally convinced that. We're going to see a drop in the oil prices once again before they start back up. Okay, so we talked about last week the possibility of 2017, real estate drop, flattening out. Okay, which presumes a negative market. And I want to give you some reasons as to why we think this may well happen, and why there may be a very serious issue within the next, say, 6 to 9 months, by early 2016. Okay, there are basically five issues that any one of which could really create a major impact on the economy. The first is that the wage growth is really bad. I mean, it really sucks, and people are there's so many bankruptcies that have occurred, and people are so buried in debt. And if it wasn't for the fact that a lot of seniors are tapping into their pension funds, things would be even worse, and that's not going to last. So without the decent wage rates for all levels of the economy, there can't be commerce. People are going to have trouble paying their rent, their mortgage, their fuel bills, everything. So that's one major possibility. The other is that the pension companies themselves and insurance companies may not be able to meet their requirements. The rates being where they are, and the markets being so poor. Well, the stock market has been good, but it depends on where you've been, what side you're on, and what you're watching. It could be a major problem. And if pensions and insurance companies can't meet their obligations, then cash becomes king, prices tumble, okay? Deflation. The next is your emerging markets, and in particular China. And I keep saying this, and people are saying, China's doing great. They're doing much better than what they have, but I'm telling you, I know firsthand, the China real estate market is a disaster waiting to happen. I mean, they have buildings, they're brand new buildings, skyscrapers, one after another, condominiums with nobody in them. And commercial buildings with nobody in them. How long do you think it's going to be before this whole picture tumbles? And if that goes, the world economy is going to be in big trouble. Okay. Next is the weakness in commodity prices. Now you've seen a lot of you are watching gold, you're watching silver, you're watching platinum, you're watching oil. These are not big numbers. These are definitely deflated numbers, and with that, you're going, and in addition to that, the higher dollar is causing a cash crunch. Okay, on the one hand, you're buying things cheaper, but what do you need gold and silver for? Your watches and your teeth. Oil, yes, it's better in some respect, but don't forget, there's tremendous losses. A lot of these oil companies are taking tremendous hits and being foreclosed on and bankrupt and whatnot. So this can well be, if commodity prices decline and the dollar even stays at its own level, never mind accelerates, you can see a deflation and depression. Okay, and the last, which is always a possibility, is that the interest rates, the Federal Reserve may raise the rates too early. And if they do, I mean, we got big problems. And this is the reason why they've been holding off for so long. But they're under pressure. Going back to what we said before, for instance, with banks, insurance companies, pensions, for higher rates, so that they can generate more money for the policies and the policy holders. So those are just a few of the major issues that can cause a tremendous decline here. We think that things will be okay for this year. We told you that, but we are worried about October this year and going into next year. I know this is we still have 6-7 months before that occurs, but forewarned is forearmed. So smile. Have a great week.